Okay, so at this stage, would would continue with the training since there are no questions for us. Um, yes, so even we'll just move to the next section. So the next section for us will be I think someone asked a question about whether we would have practical, you know, presentation about how these questions can be answered. And to do that, we have our key partners on the call, and that is Duke Williams. They are, in fact, our gold partner in Ghana, and they are able partners. So at this juncture, we have Duke Alute on the call from Duke Williams, who will be running us through this section. And I believe it's going to be engaging, so we should try and, as much as possible, to ask our questions to clear all doubts from our mind, so that we are ably prepared towards writing our exams and passing. Thank you so much. So, Mr. Alute, at this juncture, we open the floor for you to take over. Thank you so much.
Thank you so much, Ebenezer and Gerhard, and thanks to all those here um, taking part in these sessions to enhance our chances of passing. For some of us, we are not new to these platforms, and for many of us too, we are new to it. And so I believe by the end of this session, we should all benefit from this. To start with, I want to see if you can see my screen now, please. If you can
Yes,
see
please.
my
I can see
screen.
that and also hear you.
Yes, please. We can see it.
Okay,
Thank you.
thank you. Thank you. All right. So just a quick rundown on the line of action for this evening. Um, I'm not here to teach very technical things as in knowledge or content, but then to make the platform usable and um, eh, you know try and make it friendly to you so that you understand what is there for you, how the platform can enhance your ability to pass, and so on and so forth. So yes, what I intend to do is first to open up the CB workspace. How somebody was asking how to navigate your way around it, and then most importantly, the functionalities that are there. So I'm mindful that I'm doing for both APM and AFM, and it's important that I do common areas first before I narrow down to more technical areas where AFM will need extra guidance in. So I'm looking at the workspace and the functionality. So to do that, um, you need to log in into your personal My ACCA. Some may want to go through this. I believe that is a common area. I saw Eben or somebody trying to log your way through. So through this, you get study support. That is another long way. Somebody goes to the ACCA qualification, say choose APM or AFM. Then somewhere down there, you can come to the CBE platforms and you can now log into this. I'm not able to log in from here because I'm not a student, unfortunately, but then I still have access to that. And then when you have done so, on the right hand panel, you'll see a lot of resources there. The paper name, click on that, which one you're looking for. Now, what I've chosen to start with is the APM specimen paper. You see that on the right there. So that's what we have here. And to look at this is what it presents itself to you once you open it up. APM, AFM both come in 50 marks to start with in question one, and two compulsory 25 marks for the section B. The 50 marker will look like this. And on this first page, you're going to see this set of information, the exhibits there, what to expect within the exhibits on the right hand side here. And then on the left hand side, you see the exhibits. What I mean by the exhibits is what would have been typed on a piece of paper or printed for us to do if we're doing paper based um, examinations. But then the only difference is these are broken up in chunks, as in units, to make it readable and accessible. So when you have that, then you have symbols that you may want to use or insert somewhere to show value, and then highlighting. Now, I believe in the normal examination, if it were paper based, you would have probably underlined something or crossed something. So yeah, these facilities are there for you to do. I'll demonstrate one for you. Striking through, that is where we have completed an exercise. You can strike through if you have the time to. And it also has an online calculator, um, something if you really want to use. I would advise that you get used to it, because it's not the usual Casio or the other bits that we are comfortable with. So make sure you can use it here. But it's unlikely that you may require to use this unless, except for small calculations, because the spreadsheet somehow will do many of the calculations for you. And I will strongly, let me say that again, advise that where calculations are involved, unless it's just a minor calculation of a single ratio here and there that you could possibly use the calculator for, please use the spreadsheets, because where partial marks could be given within the spreadsheet, I'm going to demonstrate that you could be given partial marks. So the marker can see where or how you arrive at the paper or a particular figure. Okay, so you have that. Then, so these are the exhibits, as I said. You do have a scratch pad. Now, this scratch pad, call it, is like a rough work something that you can sort of put points that are coming up in your mind. Um, just make sure you don't forget it. So I remember point number one for this is discount. Point number two is blah blah blah. Now be mindful that this cannot be seen by the markers. It cannot be seen. So whatever you've done here, if you want it to be seen and added to part of your responses, then you will need to cut and paste. What is it that, or what are the responses? If you come somewhere here, you have the responses are the word processor. So that is where mainly all the writings will come from. Then supporting calculations where necessary will come from into the spreadsheets. I'll be demonstrating bits of this as we go on. Now, in the typical real exam, on top of this one of Ray, you will see the time taken. So your 3 minutes, 3 hours, 15 minutes, you will see that there, and it starts what taking as you go along. Now, down somewhere here, if you can see my cursor, you have the navigator. The navigator gives you an overview of the set of questions that you have. Some of you, I believe, are familiar with this. So question one, it says I've attempted. I've actually not attempted anything, but the mere fact that I've opened it up will suggest that I've attempted. Now, it is important, and I want to stress this, that as candidates, just like a typical paper-based exam, you are likely to flip through all the three answer questions to see which of them is more, comfortable to start with. And so, in the same way, you could roughly navigate your way through to see which of them you would want to start with within the time frame. It's best to start with the best question or topic area. Now, the danger is it's unlikely that all candidates will have the same set of three questions. Um, so somebody may have question one being different from the others, but maybe our question two and three are also differ. And what that means is it's essential that you cover every area of the syllabus. That could be what exam. All areas must be what looked at. You can't make a choice because you cannot be sure which one will come as your question one or not. So I'm sure there are just a few questions to play around um, to help this happen. So make sure you cover every area. So I can look at question two from here. So I click on that and I can see question two. And if I want to go back to question one, I can go back, as you can see, from the navigator. And of course, the next function takes you to the next bit here and there. All right. Now, again, the formula sheet here has the workspace help. Now, I'm not suggesting you should go to the examination room under timed exam condition to now begin to look at these things as to how to cut and paste and this. That would be very, very, very dangerous. So whilst this information is readily available in your preparation, it's important that you make sure you are familiar with these functionalities, some of which I'll be demonstrating as we go along. Then again, you have the formula sheet. Now, this particular paper is the APM. So I'm using the APM to start. I'll move into the AFM. So I'm using common. So a formula sheet at present value tables, annuity tables, and then that's about it. But the AFM will have more standard normal distribution tables and so on and so forth. Then the exam instructions. Again, you are not going to spend considerable time trying to understand this on the day of exam. You must be very familiar with this. These are readily available information that you need to consciously make time to ensure that you are comfortable with this, and that will help you as you prepare for the examination. All right. So to start with, um, never start answering your questions until you have read through every single exhibit. And I wish to stress that again. Never start answering a question hurriedly until you have read through every single exhibit. So it's important to go through every single exhibit. And so, for example, if I open up this, company information gives me this. Now I can, if I need more space, I can enlarge that here and then keep that here. Now in this, I have the background to the company. It tells me what they're about and all that. I'm not here to sort of go into the details here and there, but then from here, assuming I found an interesting, point here. So for example, typical of APM, understanding the company's objective or mission statement or whatever it is important. So I can now go here, for example, so I can highlight this. Okay, so I highlight and I say, okay, I want to highlight this so that it becomes something that I want to pay attention to, and so on and so forth. So if I've finished dealing with that, I could equally say, okay, I'm crossing it to show that I've finished with it. That is up to you. Of course, nobody's going to give you a mark for highlighting here and there, but then it helps for you to be able to pick up the salient points, particularly for APM, for you to be able to identify the requirements. The requirements are hidden, often hidden, in fact, not often, hidden within the paragraphs of the exhibit. So it's important that you get to do this right. So my also another advice is I'm not such I don't, or let me put it this way, I wouldn't advise that you open several exhibits at the same time. So as you see, I've opened the second one. Somebody can be opening up here. Yes, it's up to you. If that works out for you, fair enough. But then it can make the whole workspace cluttered. So you can open one at a time and focus on. So this is the very first one. If I finish with that, I could go on and then possibly look at the second one here, and then go on to look at the third one here, go on, look at this. Now, you notice that I have already highlighted a few of them, and there's a reason why I've done so, and I'll be demonstrating that shortly. Now, one of this, for example, is part of the exhibit, is an appendix. Now, this appendix is typical of APM and also for AFM, where, for example, there is a stated financial information which you may need to use to project something or calculate some ratios for assessing performance. Now, of course, within this, these cells are locked, and you would not be in the position to, do anything here. So for you to be able to work within this or probably calculate some ratios using this, it is important that you cut and then paste. And so I want to do that portion straight on here, just a quick one. Now, sometimes, depending on the size of the information, as you can see, I needed to scroll it up and down. At a glance, I can't see the whole information. So my advice is look up here and then reduce the size. Now, when you have reduced the size, if you still want to reduce it, yes, at this point, I can see the entire information. So then I can say, okay, let me just copy this bit here. That is the bit I need. Okay, now, so copy, what do I need? Control C. I prefer the Control C sometimes works, in fact, works more reliably for me. I don't know about you anyway. So Control C, and from there, I'm going to pop this into my spreadsheet, which I've just, let me just, let me delete this. I was trying to do something here. Let me do that. Okay, so this is what I'm going to do. Control V, I have it here. So at this point, I can now make amendments or changes to this. Now, one thing you need to get right is within the spreadsheets, ACCA spreadsheets as you have, unlike the traditional ones, you cannot insert a cell or a space or anything. So it means that if for one reason or the other, I need to do an additional line in between this because of what? A relatively new information, then I need to cut this. So Control X, I'm cutting that and I'm popping this one step what? Down. And so now I do have a space to be able to insert anything else that needs to be what? Inserted. So take note, for those doing AFM, sometimes you put out a schedule of the MPV and you realize that you've mixed a particular cash flow and you want to insert that there. All you need to do is to cut and paste it one step down and then be able to work your way out from here. So from here, we can now perform any form of calculations that we want to do. So for example, we know the weighted average cost of capital. Just let me just pop out something up for you. My weighted average cost of capital, of course, this applies to AFM and APM. This multiplied by cost of debt after tax multiplied by market value of debt, then of course all divided by market value of debt plus this. Now this is what a typical weighted average cost of capital is. Now, in such exams, this is what you need to bear in mind. To avoid repeated calculations, create what we call a data table. A data table will be very, very helpful where we will subsequently reference every point. So for example, I know I need cost of equity. I know I need cost of debt. I need 1 minus T. I need market value of equity, for example. So I need market value of debt. I also need value of equity plus value of debt. I think so. That is about it. Now create a data table and assign values to them, then use them to calculate your value. So in that vein, something like this. The examining team recommends that we use data tables. They do help. So for example, in calculating the work, as I said, I need a KE. Now, of course, in a typical AFM, KE will require some beta, will require this. So just to take care of the AFM people, let me say you have some beta equity or all those bits there. But then typically, I have a cost of equity, I have the cost of debt. Now I have a cost or one takeaway T. Then I need cost of debt multiplied by 1 minus t. So as I said, I'm doing common areas first before I move into more technical AFM based there. So data table, I have this market value of equity, market value of debt, and I can literally just find VE plus VD also on one side. So let's say, for example, this is 8%. Now, let's be very, very careful. Some candidates under pressure, 8% is 0.08, but then you may end up picking up 0.8, and that becomes a worry. So then I prefer you do equal to 8 divided by 100. You have that there. Assuming this is 6%, 6 divided by 100, and then maybe this is 30%. I know 30%, 1 minus that becomes, 70%. So one could say 1 take away 30 divided by 100. Of course, I need to put my equal sign there before I can get a value. So yes, all right. So I don't need that to be, yes, it's giving me a percentage, nothing to worry about. So then AD, which I have as this multiplied by that percentage, gives me that value. Then I need a market value of equity, maybe is equal to some number of shares multiplied by share price. And then maybe this is, say, 1,000. So then again from here, I could literally just work out VE plus VD, and I have that. Now, what then is my work? And I can see from my work that all I need to do is, if I can find KE multiplied by this what I have, so then I can just all divide by this, and that's it. Now, these statistics are important, particularly if we'd have to work out those of us doing AFM, de-gearing and re-gearing. You notice that we will need some of these figures repeatedly, one for another company and one for the other. So let's say this is for company A, and we may need another statistics for maybe company B. Line them up there and reference them, and avoid having to do this over and over and say, oh, I can put all that in a work formula at a go. Now, if it gets so complicated, you might be sweating in exams. So data tables are essential there. So yes, I would want to do PE multiplied by this. Okay, so let me just work. So my work is essentially KE, which is that bit, multiplied by market value of equity. I have that. Okay, now plus into bracket market value of debt times, so this is the one I'm looking for after tax, multiplied by market value of debt. Now you notice that if I divide by the value of both equity and debt, it's only going to divide the second part of it. So my equation is actually not accurate. So then the best thing to do is to have introduced a bracket, a double bracket, one before and after. So then this now divided by that should give me my bit. So then I get this, and it looks like I can't see that. Why? Because I did not format this. So what I could do is I want to format this to two decimal places, as I can see there. Beautiful. And I can convert this to a percentage. So that is the weighted average cost of capital. So what I'm trying to demonstrate here is it is important that you put up data tables. And this is very, very key, particularly in option valuations and other things. You need data tables so that at a glance, when the marker hits on this, it may be the wrong thing, but then he can find out how you arrive at this within the window. Now, if you choose to work this with a calculator, and there are no elements showing up there, and somebody just says, let's say you worked it out the calculator, 6.37 is what you put there. Yes, the marker hits on that, looks at this place, and there is nothing to show. you are going to get 0 for all of it. But then if this is to give you, say, 2 marks, and a portion of it is wrong, then the marker has now got the opportunity to look through which portion was wrong. Perhaps you worked out your tax rate wrongly, and that is why you are getting a strange answer. So it's important that you produce data tables to help you do this. This is important. This is so important. I will be coming back again to the spreadsheet, particularly in the area of investment appraisal, finding your IRRs, the MIRR, and so on and so forth. But then I want to switch to presenting your answers. I said to you that all answers, every commentary on this has to be in the word processor. And within the word processor, typical of APM, AFM, you could be asked to, you are normally asked for question 1 to present a report. Very important. So we're going to look at how to do this, how the word processor functions can help us do this. Now, to do that, read through, as I said, the entire set of what exhibits. Now, the requirements I can see here is this, giving us 50 marks. The requirements gives us an idea of what is expected of us in any given scenario. For AFM, chances are that all the requirements will be detailed in the actual requirements you see here. But for for APM, the requirements are rather stated inside the conversation. So I'll be picking them up shortly. So I prefer to use the APM to demonstrate the report writing, and then that will be helpful for them. So yes, now to do this, it says write a report to the CEO of Iron Chicken to respond to her instructions for work in the following areas. It says 1, the use of economic value added as a key performance metric at IC. Now, of course, anybody reading this hasn't got any detail. And so that is why for APM, the details are embedded in the scenario, which we're going to pick up shortly. But I'm doing this as if I'm doing both, AFM. Now, what you want to do is to highlight this. Don't worry too much, just highlight and then Control C. Now, I have copied this. Now, I'm closing my spreadsheet response bit here. Now, I'm closing this. I'm coming to the word processor. Now, in here, I am going to paste. So Control V. And it says I should write a report to the CEO of Iron Chicken, and so on and so forth. Now, presentation is important here, and so the 4 professional marks will count. So then I'm looking at, okay, so it says report, okay, to, from, dates. So you type that subject and then introduction. So this applies to all of us here. So you can do that. Yeah. And then I'm formatting the answer, something to get my head around that. It says report to what? The CEO of Iron Chicken. So literally, I can also copy, oops, yes, CEO of Iron Chicken. If you can type that quickly, fair enough. If you can copy, why not? I copy and then paste there from, you'll be told the capacity in which you are doing that. So date of exam. So for AFM, for example, 10th September, maybe 2021, and I think the 8th for you as well. The subject, the intro. Now, the intro is your terms of reference. Now, for AFM, assuming these are all the details, all you have to do is, I'm going to do this. I'm going to copy again. Please listen, this portion is for AFM. and I'm going to paste again. But then I'll use the first portion to write out my intro that my report will. So all I'm going to do is I'm going to take out the I and the I, and so on and so forth. So my report will do blah, 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 and pick them from this and take out the marks from it, and then add on a conclusion, and I have my report. So I want to do that for the APM, which is a bit more detailed. And so I want you to pay attention. Now, if I look at this, I have the last bit here. It says you are the performance management expert. So this is the capacity in which I'm writing this report. So then report from performance management expert, and task you to aid with, on the following four aspects of improvement program. Apologies. Now, what is the first one? The good thing is each exhibit oftentimes will focus on one particular area. Every exhibit will focus on one particular area. So pay attention to that. And within the exhibit for APM, you are looking out for the specifics of the instructions given. Now, it says the CEO wants your views on the use of this as a key performance metric. And that's what you see in the general requirement. You have been supplied with the current EVA calculation in Appendix 1. We've seen that. But there is some doubt about whether the junior management accountant who has done this work was sufficiently trained in this method. So therefore, the CEO requires you to, so for this is the real requirement. This is the real requirement, not the generally stated one for APM in the bigger one. So it says he requires you evaluate the accuracy of the calculation and advise her on the results. So I will highlight this if I want. I've already highlighted this. I'm going to copy. So Control C. And when I've copied, I'm going to my word processor and I'm going to paste this here. Don't worry. So I have this down there. I'm going to the next bit, CSFs and KPIs. What is it that they want me to do here? So quickly you read through, and I've already highlighted that to save time. It said the CEO wants you to briefly explain the weaknesses of the current KPI associated with each base and then provide a justification for it. So you notice that for each of these requirements, there are sub requirements. So two questions in one. So again, I do Control C, then I come here and I'm coming to paste here, Control V. So you notice that each of them first is evaluating the accuracy and the assumptions which form part and advice. The first one actually has 3 questions there. The second one has 2 of them, and I'm building up. Nothing to worry about. I'll soon come out with my intro. Now, improvement projects. Again, it says the CEO, as you can see here, needs you to explain. So the verb is explain what the 3 improvements are and how they'll help you to meet the CSF and ICF, and also how they impact on. So again, there are 2 questions here, and these are issues that every candidate here should pay attention to, that there are sub questions within every requirement, and it's important that as you copy and paste them, you now pay attention to those details there. So I can take the last one if I want. It says the CEO wants an assessment of the impact of the proposed new information on the free this. Okay, so just like this, let's assume that all I have is this. So all you have to do is this report, don't write too much, will evaluate the accuracy and assumptions which form part of this and that. Full stop. Then go on. It will then explain a weakness of the current base associated with each of them, and then provide a justified alternative KPI. So full stop. Then I have It will also explain what the free improvement projects are and how they will help meet the CSFs and this, and how they will also impact on the system. And then all that you have to do is what? And finally, draw a conclusion. So it's a cast and paste business. Draw a conclusion. Now, as I said, in this same bit here, I do have my headings. So the accuracy, okay, evaluating the accuracy and advising on the results. For example, if I copy this, this is my first part of the body of the report. So Control V, so the accuracy, then comes assumptions, which form part of it, then comes what? Advice. So these three areas are sub what? Requirements that I need. So then when you do this, then you are sure you are not missing anything out. So the first requirement, which is the I of what we needed to do. So I then will deal with these three things. So again, here, I can bold this here. You can put, yes, over here, bold them. So that is how you present these things. So then this then will become, call it the subboard headings within your report, knowing that you have to deal with these elements within the report. You take them out one after the other and write beneath them. And this will give you a professional look. So then you go on to look at what the weaknesses, the current report associated with this, and then explain this. If I just copy this again, then I'm coming to create a response called II, and now just Control V, paste this here, weaknesses of the current this associated with this, and then justified what? Alternative. So again, this then becomes another heading beautifully, and then you present your answer in that order so that you will know at the end of the day which portions of the question you have answered and which portions you are yet to deal with. All right, so that is on presenting your answers here. Now, you may have to make reference to the spreadsheets or the calculations. Now, this is where labeling is so important. It says evaluate the accuracy of this and the assumptions that do that. So I went to the spreadsheets. Maybe I've done one or two things here. I've added a few figures here. I'm changing this. So as you can see, these cells have not been, call it linked. Okay, so if I want to link them, for example, I could now put, let's say, underline this, okay, and then decide on who is adding back, who is subtracting, who is going back here. So we add back this, and then maybe I put a negative signage here. I put a negative signage here and then come out with this so that I can say this would then be simply the sum of this. So yes, notably auto sum doesn't work here, and I have a figure like this. So now I have now linked the cells. So if I now introduce another figure here, for example, that will automatically change this. Okay, so I will need to talk about this relating to what? I here. So I have this as I referenced here, and this is probably a figure I'm looking for. Now I can copy this figure, say Control, C, and then go to the word processor if need be and paste it there, and then begin to talk about it. But then I need to tell the marker that this has to do with working one. It is important. Every working has to be cross-referenced. Now, it is chaotic to see a spreadsheet without references. And so that means that the marker has to now look through and see which one relates to that. And I don't think it's a fair thing on every marker to be looking around to see which one is before, because you failed to label them. Now, there will not be any special marks for, detailed spreadsheet skills or spelling mistakes or anything. So, yes, you are allowed to type with at least some errors, but of course, as you practice, you begin to get your head around some of these things. So that has to do with presentation of your answers. Now, I want to now turn my attention to the AFM, no, still in the APM and the AFM, MPVs and IRR and modified internal rate of returns are common places. So I want to take you briefly to a completed, a semi-completed MPV schedule. Now, what do we need to do here? Now, if you ever need to do an MPV sort of question or overseas investment appraisal question for the AFM students, if you want. Now, it is important and very, very important that you create a pro forma. So that is why it's essential that you have an understanding of which cash flow goes where. So then knowing that it's a 5-year project, for example, so quickly you can just go one, two, 3, 4, 5, and so on and so forth. So you have this, then you put up your signage for, so one of that, you extend that, it comes up there. Now, you notice that I left some space here. Now, sometimes, as you can see on the left here, there may be the need to leave out some data here that I'm using in working out some of the figures. So say the cost of capital is here, I'll be referencing that to work out some figures here to work out my MPV. So then I can leave out a column that will stay out as what my data where I'll be referencing something from. Now, the first thing you have to do, like I said, begin to type out what the outline of what the answer should look like. So fixed cost, tax allowable depreciation, taxable profit, and all those bits. Write them out there quickly. Now, I do have a video on, if you search YouTube for MPV for strategic professional session, MPV for AFM something from Duke Williams, you should be able to find that on YouTube, where this particular question you see there has been done in detail. But the object here is to make use of it. Now, the next thing you want to do is don't wait till all the figures in here begin to mess you up before you begin to format them. So quickly, you want to format the cells and say you come in here, for example. Now I can go customize and say I want currency. Yeah, but I want currency because I put the signage there for the dollar sign. I can take this one there and then say apply. Okay, this applying, I can also then go and say 2 decimal places maximum. So then I have formatted the cells so that whatever I work within this will stay within the stated figures. Now write those ones out very quickly, do all those things. Then if there is workings, as you can possibly see here, workings for sales revenue based on some number of units I have here, and then selling price, and then inflation. So you do have, I'm sure when you have gone on the YouTube, as I said, you'll see this particular question there, which is what I do have there. Time will not permit us to do this. The object is to show you how to work your way around this. So you format these cells, okay, and you work within that. Now pay attention to figures you are taking as your negative figures. And if you are putting them as negative, make sure at the point of summing them up, you are comfortable with what you are doing. Now, what I mean by this, for example, is the sales revenue is just to give you an idea, it says these are the units there. Selling price estimated to be 8 per unit in year one, growing by 5% per annum. So year one, the selling price is already 8, but then after year one, we begin to grow this by 5%. Now, what makes the spreadsheet very interesting is this. So to show you how I've arrived at what you see there, for example, what I do have here, it says in the first bit there, it is the selling price, so 8, for example, multiplied by the volumes. I have that here. And then subsequently is going to be the 8 again multiplied by the volume, okay? So I have the volume multiplied by 8, the 8 multiplied by, so multiply by into bracket, for example, I have 1, and then this is why this is the data 5%. So plus this. Now watch carefully. Now if I raise this to the power, you know, 2, it will be misleading because the growth begins from year 2. So I'm taking this. But having said this, it is dangerous because I'm referencing to a fixed figure here. So it's important that I put the dollar sign in front of the B, the cell, and then that. And when I've done this, for example, I have this figure here, then I can comfortably, spread this out and get the figures here. Now, if I failed to put the dollar signs in front, then it means that it will literally ignore that and give me wrong figures. It is a common error for many candidates not putting those things there, and so they end up getting something so dangerous. Now, I do have the sales revenue here. Now, to put them here, for example, starting in year one, all I have to do is equal to, all I have to do is reference the first one there. And once I've done this, I'm now going all the way to push this here, and all the figures will fit in beautifully. So nice, so well. So that is how you can put some of these things there and work it out. So I'm going to demonstrate in a while calculating your NPVs, your modified internal rate of returns, and if time permits, I will demonstrate option valuations and so on and so forth. So yes, quickly, I've done this in outline here. I want to find the NPV. Now, what are the functions available to us here? Now, the ACCA makes these things available to us, and I believe we can all see that commonly used spreadsheet formula here. The sum, I've just used that. Average, you can use that if you want, but then the square root, particularly needful when you're doing option valuation, the power function. I prefer to use shift 6 rather than use the power base, but anyway, any of them will give you that. Count, round, log, and MPV. So I'm going to focus on the MPV, IRR, and then the natural log, exponent, cumulative base, and the modified internal rate of return. And I'm going to do that very, very quickly. Now, watch carefully. Strangely, you would have expected that when it asks for the MPV function, it should give you the MPV of the values you are looking for. But that is not the case. As you can see here, it goes on to say that you have the rate, then the value, okay, or the range of values. But what is more important is the first value in the range begins from year one. So what that means is the discount factor is your rate, as you can see there, but then the values calculated literally gives you present value from year 1 to n. And we know from first principles that the present value from year 1 to n is not the MPV. The MPV is rather present value from year 1 to n, then we take away the initial capital. So yes, I'm looking at present value from year 1 to n as this, and then I less what? The initial capital, that, and that should give me the MPV. So if you are doing that approach, this is what you have to do. You need to be very careful. So I have this. I can find present value, okay, 1 to n, or 1 to 5, okay, in my case, 1 to 5. Look at this, it's beautiful. Now, I'm going to do equal to MPV, as you can see, and then it says my rate first. So what is my rate? That is my rate. I have that in the data. And then it says all the figures from year 1 all the way down. So the net cash flow figures. So from year 1 here, okay, and that should give me this figure. Now, this is not the MPV. I can now just knock out the initial capital. And what is the initial capital? I have it here, which is that figure, and that gives me this. So then my MPV then literally becomes the sum of both figures. If you don't mind, just do this and that, and that, and then you have MPV sitting, so that I can underline this and have my MPV sitting there. Now, another candidate, that is one way to do that. Another candidate would want to do the MPV straight away and said, this is my MPV. Now, I want to incorporate all this into that. So then I'm going to do equal to MPV. So he opens up the bracket, picks up the discount rate, comma, and then, of course, highlights the cash flow from year 1 to this. Now close the bracket and then subtract the initial investment from this straight on. But be careful and be very, very careful. The examining team has expressed this, that oftentimes when we have already negated a figure, we forget that it's already negated, and then we end up, putting another negative, which would create double counting. So then in this case, as you can see here, it's already negative. So I'll just, oops, all right. Now I'm just going to add on. So I'm going to add on this figure there, and that gives me this same figure. So when the marker hits on this, so the two figures you can see there are the same. The two figures are the same. And any marker hitting on this will know how I've arrived at this, that I took this and that, and then added on my negative initial net cash flow of 16,774. That is also acceptable. Now, the third way to do that, which I would advise, particularly where AFM candidates are advised to do project duration or something, now is to find the discount factors. So I know, or we know, that the discount factor is 1 over 1 plus r to the power n. So then I'm going to do equal to, I'm going to write a formula for this, 1 over 1 plus the discount factor to the power n, and create a discount factor table. Let's do that quickly here. So from here, I can do equal to, watch beautifully. Now, like I said, I can reference this or keep it out of place. So yes, equal to 1 divided by, into bracket, 1 plus. So because I'm referencing this, okay, now this is raised to the power. I know the first one would always be 1 anyway. So any number raised to the power 0 is 1. But then again, because I'm referencing that from the 0.1, I will need to put this in front of the B and in front of the 15 here for me to get that figure. It's showing 1 because this. And when I cross this, it gives me all 1. Don't worry. Let me just change that to 2 decimal places. or maybe just customize it, maybe to maybe 3 decimal places, so that you can appreciate that. So this must be familiar figures that you know already from your normal, from AFM and all those bits. So yes, we can do this. And so from here, somebody will now say, I'm multiplying this by that and that to get that. And then I'll literally just spread that. That is one way. And then my MPV will simply be the sum of all that I have there. So referencing all this, and I believe we should get so beautiful. It's all there, 116,744, giving us the same answer. So the spreadsheets, in fact, makes paper like in fact, all papers, particularly AFM, um, rather easy to get your head round with. So that is the MPV functionality. Now let's turn our attention to the modified internal rate of return. Now the modified internal rate of return, of course, begins equal to IRR, then the range of values. Now it says the guess is optional, so don't worry about it. I'll just the range of values. But then what is the range of values? The range of values, first one begins with via 0, unlike the MPV function. So all I need to do if I want to find the IRR of this is, so look at it, I'm coming to find the IR function here. So the IRR will be equal to IRR, and these are particularly helpful. And when we come to bond pricing, yield to maturity calculations and all that, again, you'll find some of those short videos on that I've done on YouTube that can also be helpful for you as well. So you have the IRR, and I'm just simply this time from year 0 down to 5. So I'm referencing from year 0, as you can see here, and that is all you need to do. Oops. Okay. IRR. All right. Let me just format this to that. Yes, that gives me 4%. If I want it in this 4.47 there, 4.47 there, interesting. So that is my IRR. Very simple. No need to do first rate, second rate, or any. These are equally acceptable. And so that saves us considerable time. Now, the next bit there, which will also help you for your exam, is the modified internal rate of return. So again, at this point, they are all examinable under both APM and AFM. So that says find the values, the range, the finance rate, and the reinvestment rate. So it means that there are two rates to contend with. The normal finance rate, as in the discount rate, and how much we need to reinvest monies coming in at the end of the project, at the end of every year of the project. So there are two rates here, but under NPVs, just like IRR assumes, makes the same assumption under NPVs that all money should be reinvested at the cost of capital. So nothing to worry about here, same stuff here. If I want to find the modified internal rate of return, is simply going to be, again, equal to modified internal rate of return. Now, I have the range. Again, this range, not from year 1 like the MPV, but just like the IRR, 0 to the number of years. You have a comma. Then I do have the reinvestment rate, this rate. Now, assuming it's the same rate as this, I click on that again, copy that, and I have that. Don't worry, it's giving me that strange value there, but then I can see, yes, that is 6.67 there. Nicely done, beautiful. You can bold it to make sure the marker can see that there. Now, again, if I need to reference this, okay, so what I could do is I can literally just say IRR, MIRR to Control C, for example, going to the word processor, or a typical word processor. I think the one I was using was here. And then Control V, oh, no, because it's a different, yeah, it can be pasted anywhere. So, yes, so you just copy it and paste it there and make references to that. But then you should tell the marker where they can find this as a working. Now, so what that means is as I do this, I'll need to label this as, say, maybe working 5. I'll need to label this as what? Working 6, and so on and so forth. So that is that there. Now, quickly, the other bit that we need to get our head around quickly is this, which has to do with option pricing. So our BSOP model, the natural log, all those bits there. Now, I'm going back to the platform to demonstrate something to you. Now, you see that the formula is given here. The formula sheet is given here. So we have the Modigliani embed there just as reference. Now, we saw that we could work out the present values without needing to do that. But what is more important, please pay particular attention here. Now, the annuity factors, you notice that we were not in the position to do that using the annuity factors. So it means that when it comes to the annuity factors, you may still have to come and reference this and pick them to use them, unless you have a way of working out the annuity factor, and that will take more time than, so I mean, keying in this formula in there just to get a figure that is readily available here. I'd rather come here and pick out the figure here, and I might have to use the annuity factor just once or twice. So I'll just come here and pick it here. So pay attention to that. The standard normal distribution functions, we're going to get our head around that as well. So I want us to quickly look at this. There are 5 stages to working out the value of a call option or a put option for that matter. What we need is to first identify the determinant. So the determinant essentially then becomes something like the data table. So here, data table plays an essential part of what we're looking for here. The marker needs to know what you have made up as your 5 elements so that it can follow you. Now, if you don't state these things and you begin to work them out straight away and you make an error, it's going to be very difficult for the marker to identify what exactly you are looking at. So you have, let's say, for example, the price of the line asset is 115, exercise price 100, risk-free rate, time to maturity. Now, again, you look at here, you see that 10% divided by 100 gave me that. Time has to be expressed in number of years. So 3 months is 3 divided by 12, and volatility expressed in percentage as well. Now, this is point number 1. Then step 2, I'm now going to find these 4 areas which will be needed regardless of whether I'm finding call options or put options. So the natural log, and the reason why I need this is when I come to my formula sheet, for example, picking up the formula sheet, I will see from here that Black and Scholes option pricing model, I would need to find a natural log of PA over PE plus all this. So you see that these items are all part of the 4 items. So S, root T, all these ones are all there. And then the extra thing is E raised to the power R times T. So these are the components that I have here. So natural log of this, E raised to the power, that's the EXP function. I'm going to demonstrate that shortly. And then this last equation that you have here. Now, what do you see? I'm looking at natural log. Where can I find this? Now, this one says the natural log ln of the number, blah, blah, blah. So all I have to do is equal to natural log. When I come to the exponential, equal to exp and put the figure in. If I need to find this, I'll come to that bit again. So let's see what I can do with this. For the natural log, for example, all I needed to do to say equal to natural log, so ln, okay, into, I reference this, divided by PA, close it, and I have this. Now, again, you see something strange, different from this. Why? Because I have not what? Formatted my cell. And if I want to format it, which is what you need to do, is to know, say, 2 decimal places, and I have them there. So in the same way, I'll take equal to exp into bracket, negative r, so negative my r, which I have, multiplied by t, which I have, and then I have this figure there showing there. So that is how I have arrived at these figures you see on the right side. Now, the third stage is now to find your D1 and your D2. Now, looking at D1 from the formula, sheet, you see your D1 is the sum of this value, add on this, divided by S root T, which I have already. So what do I do now? Closing this, I just need to say, okay, equal to, I'm just doing that bit and we'll move on, equal to this figure, okay, add on that figure here, which I already have, and divide all this by S root T, and that should give me 1.3. And then what is my D2? My D2 is my D1, take away S root T, which I have here, and I have 1.26. Very, very beautiful. Well done. I mean, simple. No need to worry about whether you are doing something to decimal places or whatever. You just have to format that. Now, the next then is to find the ND1. Now, this is where the norm this function helps. So here, norms this is important. In an earlier SCCA publication, they missed the S. It means that normal standard stands for S distribution. So norms this and then the number, and you are going to look, you don't need to go and look out for the number in your table. No need at all. So equal to norms this, and that should give you that. So all I'm going to do is equal to, so I type norms, so don't miss that. It won't suggest it for you, so make sure you have it. Norms this, then what is it? This one, and I have that. Again, I've not formatted it. So you have been sensible to actually do them below this and then format all at a go to save time. You will need time. You will need time to work your way around these things. Okay, so this then also is my norms this, and again, norms this of ND2, and I have this already formatted there. Beautiful. So then if I want to find the value of the call option, all I need to do is to look at my formula and say the value of a call option is simply my call, you know, says here PA. So I have PA, which I have there, multiply by ND1, okay, take away PE, as you can see there, ND2 multiply by E raised to the power T. All of which, all this are already available. So somebody may decide to split them, but I would want to fix them in quickly for the sake of time. So yeah, let me just fix them in. Value of the call option. Now, I don't want any surprises, so let me just fix this to maybe 2 decimal places there. So I know this is equal to, so I'm opening up a bracket, and it's ND1 times PA. So this is my ND1 multiplied by my PA I have here. Okay, so then take away the product of PE multiplied by ND2, I can see, multiplied by E raised to the power. So that is the reason why I did this. And I have this. So that is 18.5. Beautiful, beautifully done there. I don't know. I'm so excited at what is happening here. So I don't want to waste much of your time. At this point, I would want to say, at least for now, I've demonstrated majority of the key functions that we would expect here. All of them, almost all of them, cumulative that I've done that demonstrated all that we know the power function, the square root function I've used here, the sum I've used, and so these are the key things, all of them used here that can help you come out with a very, very beautiful answers. So the ACCA platform is there for you to practice. Make sure you go and familiarize yourself with all these things. Practice, 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 practice. Now, nobody can teach you how to type fast. You have to do it yourself. Make use of the cut and paste when calculating cost of capital, as I said. Make use of data tables so that you avoid having to repeat a lot of calculations, which will, have to be done. So making use of data tables like this, you have to ungear and re-gear for two companies, make all these things, format your cells if you need them, and that should be helpful. And I believe I've made up my point at this point, and so I would invite the moderator of this session to begin to take in the questions, please. All right.